So liquidity is a very popular strategy, and I've seen a lot of traders say that they trade liquidity recently because they're following these ICT or these smart money concepts, but not a lot of traders actually know how to trade it or how to identify these liquidity zones. So we're just going to go over quickly what liquidity is and how to actually identify these zones. All right, so to understand what these zones actually are, I'm going to draw out a graph of just market being in a standard uptrend. Liquidity is basically areas where a lot of orders have accumulated or a lot of people have got into buys or sells. So saying that we're in an uptrend now, our liquidity areas would be here and down here as well. So this area down here would be a liquidity area because this is the place where a lot of people have got into buys to push the market back up. And right here would be a liquidity area as well, but for the opposite direction because a lot of people have got into sells or put in sell positions here to push price back down. Now the reason why we look for liquidity areas is because price always tries to take out these areas. Banks and institutions target these areas because a lot of amateur traders tend to put their stop loss above or below liquidity or right next to liquidity. So banks will target these areas, stop out a lot of traders, then push price in the direction that they actually want to take it. So this is what liquidity looks like on the chart. We can see that we have areas up here which orders have accumulated and we're seeing prices shot down. We have areas down here where a lot of buyers have gone to the market to shoot price up, and then this is more just an accumulation zone where price has just been in a consolidation or a mini range. Now, if we fast forward, we can see where price will actually target. It comes down here, takes out liquidity down here, so we can get rid of this. This liquidity has already been taken out. We still have liquidity up here and liquidity up here. And as price is moving as well, we're always creating new liquidity areas because that's just what happens. Buyers and sellers are always getting into the market. So as price moves, we just add more liquidity areas or more areas where we think price could potentially go to this price point. Got more areas up here, and now we've got some areas down here as well. Price takes out liquidity down here, but it's left some more up here. Price will always go back to its liquidity areas, but it might not go back straight away. It might take weeks, months, multiple months, or it could go back in literally one candle and take out liquidity. It really just depends on the trend and how much buyers and sellers are in the market at the time. Create some more liquidity down here. We've taken out this liquidity up here so we can get rid of this one. We've taken out our liquidity down here so we can get rid of this one. Taken it out, but then we've added some liquidity down there. We've taken out our liquidity here so we can get rid of this one. Taken out our liquidity up here. And we're taking out our liquidity up here. As we can see, price is always taking out liquidity. It's always going up and down. But as we take out liquidity, we're just adding more liquidity. More people are getting into the market. But all it means is more people are about to get taken out of the market. So we have liquidity zones down there as well. I would say this is actually quite an easy concept. It's quite easy to understand how it works. It's just a lot of people are misinformed about liquidity and they try to overcomplicate it. It's really, really not that complicated. We took out our liquidity here, but we've left some liquidity down here. We've also got loads of liquidity up here. See, big sell push. We've taken out our liquidity down here. We've left some liquidity up here. Taken out these ones. We've taken out these ones. And we've taken out these ones. Taken out our liquidity here, and we've taken out our liquidity down there. And we have taken out our liquidity here. Taken out our liquidity here. We've got a big candle as well, which means very fast buyers have entered the market. Or buyers have entered the market quickly. More liquidity up here, more liquidity down there as well. Taking out these, less up here. Taking out these. Taking out all of our liquidity down here. We have some up here. Taking out this liquidity. Taking out this liquidity. And shot back up. But literally, liquidity is such an easy concept. I could go over this all day. Like I said, a lot of traders have it misunderstood. It is really, really simple. If you just back testing this and you see what's happening when it goes to these liquidity areas, it will take out liquidity and it might reverse. And that's what we call liquidity grabs and things like that. It's very, very easy to understand. You just need to go out and back test it. My Instagram is on the screen and I've also got a Discord chat for traders. Anyone can join. The link will be in the description. But that's literally it. If you have any questions about liquidity or any other strategies that I trade, just shoot me a message on Instagram or put it in the comments and I'll make sure to reply.